Ladies and gentlemen, good day and welcome to Oil India Limited Q2FY26 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vardarajan. Thank you, and over to you, sir.
Thank you, Shravani. Very good morning to everyone. I would like to extend a very warm welcome to all the participants and the top management of Oil India Limited. We have with us today the top management of Oil India represented by Mr. Abhijit Majumdar, Director of Finance, Mr. Salomay Amdo, Director Exploration and Development, Mr. Trailokya Bhagwan, Director Operations, Mr. Bhaskar Jyoti Phokal, MD NRL, Mr. Ranjan Goswami, ED Business Development, Mr. Ajay Kumar Sahu, ED Company Secretary, and Mr. Abhijit Das, CGM F&A. Without much ado, I would like to hand over the call to Mr. Abhijit Majumdar for the opening remarks. The floor is yours, sir.
Good morning, ladies and gentlemen. At the outset, I would like to thank Antique Stock Broking for hosting today's analyst and investor call for Oil India Limited. I am Abhijit Majumdar, Director of Finance. I am joined today by my colleagues from Oil India, Mr. Trailokya Bhagwan, Director Operations Oil, Mr. Bhaskar Jyoti Phokal, MD NRL, which is our material subsidiary, Mr. Ranjan Goswami, Executive Director Business Development Oil, Mr. Ajay Kumar Sahu, Executive Director Company Secretary Oil, Mr. Abhijit Das, CGM F&A Oil, Mr. Dharam Singh Manral, CGM Exploration and Development Oil, Mr. Saket Garodia from NRL Finance Team. On behalf of the management, I welcome you to our Q2 FY25-26 earnings call, covering the period 1st of July 25 to 30th of September 2025. The financial results were approved by the board and duly published on 14th of November 25 based on statutory requirements. Now I would like to hand over to our Chief Investor Relations Officer, Mr. Abhijit Das, who will provide an overview of the performance of the current quarter and half year ended 30th September 2025. Mr. Das, please.
Thank you, sir, for the introduction. Good morning to all who have joined this earnings calls of Oil India Limited. A brief strategic overview of our performance during the quarter and the half year ended for FY25-26. Oil India continued in a steady transition into an integrated energy company. On upstream front, we have continued to strengthen our resource base through the acreage expansion, the focus exploration, and the new prospective areas achieving drilling targets as planned and at par production. The midstream pipeline expansion is progressing well, and we are glad to announce you that the mechanical completion of our Numaligarh-Siliguri pipeline was commissioned on 12th of October 2025. On the downstream side, expansion of Numaligarh refinery is gathering momentum with commissioning of select units on track, and we are well planned to get commissioned on December 2025. A brief operational highlights for this half year ended. I will now provide the highlights of our company's operational and financial performance for the current quarter. We experienced a minor dip in our upstream operations this quarter. The combined oil and gas production for Q2 FY26 is 1.652 million metric ton of oil equivalent. And here it is 3.332 MMTOE. The crude oil production for the quarter stood at 0.848 million metric ton, a minor decrease of 0.6% on quarter to quarter and 3%, rather 2.58% on year to year. The natural gas production for the quarter stood at 0.804 BCM, a marginal decrease of minus 2.8 on quarter-to-quarter and increase in 0.6% on year-to-year basis. The key rationale of our production dip was driven by a temporary production slowdown owing to the external factors in the northeast region of the country. However, the operation have now normalized and daily production is again on its normal pace. On the exploration and the development front, progress has remained strong. Oil India has drilled 18 new wells in Q2FY26, achieving 100% of our target drilling, and drilled 32 wells in HY 2026, an increase of 28% on year-to-year. Additionally, our offshore exploration campaign in Andaman Basin has achieved a key milestone with gas occurrence in East Andaman. A brief on our international front. Oil India holds 4% in Area 1 in Mozambique through its joint venture entity BREML. In April 2021, degradation of the security situation in Cabo Delgado provinces in Mozambique necessitated the Area 1 concessionaries to declare force majeure and suspended the development activities. We have a good news here that the force majeure has been withdrawn from November 2025. The Honorable Prime Minister inaugurated the Assam Bioethanol Plant, a joint venture of our material subsidiary NRL in Golaghat district of Assam, on September 14, 2025. This is India's first 2G bioethanol plant that uses bamboo as its feedstock. A 200 TPD formalin plant is commissioned in Boitamara in Bongaigaon by Assam Petrochemicals, our joint venture company in the northeast. A brief financial highlights of our company during the quarter 2 of FY26 and half year FY26. Here, the average crude oil price realization during Q2 was $68.19 per barrel versus $79.33 barrel in the previous quarter of the previous year. In FY26 half year, the crude oil price realization was $67.22 per barrel versus $82.09 per barrel. There is a decrease of 18.11% in the crude oil price realization. This was the major impact on our revenue. Because of reduction in crude oil price by 18%, our revenue has gone down and nearly about 44% as compared to the previous year. The natural gas price is almost steady as compared to the previous year. It was $6.78 per MMBTU versus $6.70 per MMBTU. Gas was performed almost in line with the previous year. The price of crude oil has been regulated by the benchmark aligned by the Government of India during the half year. The standalone revenue for Q2 FY 2026 was 5,456 crores, which has grown on quarter-to-quarter around 9%, which is mainly due quarter-to-quarter around 9%. And FY26, it was 10,469 crore. Because of reduction in revenue and well write-offs, our EBITDA margin has also gone down to 34% as compared to 47% in the previous quarter. The PAT for Q2 FY 2026 was 1,044, reflecting 28.8% growth on quarter-to-quarter For half year, the profit stood as 1,857 as compared to 3,300 in the previous year, which is primarily because of lower price realization and higher provisioning of our E&P activities. Because of lower profit, the EPS has also come down to around 6.242 rupees per share. However, it is reflecting 28% growth on quarter-to-quarter. A brief performance on our material subsidiary NRL. Our material subsidiary NRL the revenue of our material subsidiary NRL during this quarter was 6,442, which is up by around 2.5% on quarter-to-quarter and almost 24% on year-to-year basis. The refinery achieved a capacity utilization of 100% plus, and the distillate yield stood as 86% for Q2 of FY2026. The gross refinery margin was $10.56 per barrel for Q2 FY26 and up by 110% from the previous quarter and $7.73 per barrel for FY2026 for the half year. The EBITDA was 989 crore for the quarter, with PAT landing to 725 crore. And for FY26, HY EBITDA was 1,774 crores and PAT was 1,213 crore. And a brief consolidated view of our company. On the consolidated basis, Oil India reported a turnover of 9,175 crore and PAT of 1,640 crore for Q2 FY26. We are pleased to inform you that the board has declared a dividend, and the dividend amount is 3 rupees 50 paise per share during this quarter. This is the first interim dividend declared by the company. Oil India has delivered a resilient and a disciplined performance in the quarter. Disciplined performance in the second quarter of FY26, supported by the operational stability and prudent financial execution. As we look ahead, our focus remains on the execution excellence, production growth, and long-term value creation across the portfolio. With that, I conclude my remarks. We now welcome your questions and look forward to an engaging discussion. Kindly limit your queries to 2 per participants to allow time for all. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav Jain from ICICI Prudential Mutual Fund. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, first question on other expenses, if we will see, it has come out on the higher side, around 1694 crore. This is way higher than the steady state run rate that we have been seeing. So if you can help us understand what all are the one-off items here, sir.
That's a good question. I think CGM F&A would be can take this question.
Thank you, sir. During the quarter, as you have witnessed that there is a higher other expenses as compared to the previous year, there is only one minor reason of having higher expenses because During the first quarter, what we have done, we have provided for our two blocks. One is for Bangladesh and another one is for Gabon. Both these blocks we have already provided in our financial statement during the first quarter. It was amounting to around rupees 700 crores. And one well which we have drilled during the quarter in our Andaman Basin in Vijayapuram 2, we have also provided for that in around 723 crores. This is the only reason which we are having higher other expenses during the quarter as compared to the previous year.
Well, on this Bangladesh and Gabon write-off, how should we be thinking about it going forward, because it is now appearing in quite a few quarters?
No, see, Gabon, as far as Gabon is concerned, we have thought of exiting from that area. So whatever expenses we have incurred, maybe little more expenses would arise based on the closure efforts that are going on. So apart from that, Bangladesh is also a closed chapter as far as the entire JV is concerned. We are in partnership with ONGC there. Both of us have decided to exit from that particular block. So we don't anticipate any further major increase in expenditure in each of these two areas.
Got it, sir. On the employee expenses side also, this quarter is on the higher side, sir. Anything to call out there?
Sorry, could you come again, please?
Sir, employee expenses, if we will see at 526 crore, that is also higher than the run rate that we have been seeing a little on the higher side.
Yes. CGM F&A, I would like to answer.
See, for employee expenses, what we have you have witnessed that there is around 60 crores of more expenses as compared to the previous half year. So during our pay revision, government has mandated that once your DA percentage will increase up to across 50%, then your gratuity amount will increase from 20 lakhs to 25 lakhs. So during this quarter, we have witnessed that our DA has crossed 50%. It is 51.29% during the quarter. So as the gratuity liability of the company has already increased, we have carried out the actuarial valuation considering the liability of the employee strength from 20 lakhs to 25 lakhs. So the actuarial deficit which has been accounted during this quarter is around 60 crores of rupees. That is the only reason which the employee benefit has gone up as compared to the previous half year. Rest, normal, marginal increase of our employee costs in relating to increase your normal salary and some medical benefits. But the major amount which has increased in employee benefit is for the increase in actual valuation of our gratuity expenses, which is 60 crores.
Got it, sir. That was helpful. Next, sir, on the production side, at 1.65 metric million ton of oil equivalent, when we say that we are now back to like Q2, there were some one-offs which impacted the production, and in Q3 we are now back to steady state production. Will it be possible for us to guide as to how should we think about production into Q3 and what is the steady state that we are back to now?
Okay, I think Director Operations can take this question. Yes, sir, if you'd like to answer.
Yes. Can you hear?
Yes, sir, you are audible.
Yes. So there are few factors actually that affected Q1 and Q2 both. Q1 mostly what happened is that we had a little bit extra loss due to LPG shutdown that was unwanted, and we never planned it. So because of that, we had some more loss in the first quarter, and also in the second quarter, what happened is that I like to correct one line that the production in fact dropped from 9720. We achieved 9720 metric tons per day. In the at the end of the year, also in the month of September 16 we achieved September 15 we achieved 9722 metric ton per day, which goes to pro rata, which goes to above 3.5 to 3.53, something like that. So what happened is that, and we were on a track where we were going to be around 10,000 metric ton per day this time. But what happened is that there are a few ethnic groups here, 6 ethnic groups, and one of the ethnic groups in the eastern part, they because they want the ST status. Because of that, they did an economic blockade, not against Oil India, but it is to the government. But in the process, what happened is that we have to close down wells because people cannot move for work inside and outside the facilities, oil facilities. Because of that, the production dropped to 8100 metric ton per day. Now we are hovering. We have brought it back to 9600, close to 9600. So we are because what happens when the natural flow is disturbed in some of the wells, around 10, 11 wells, which didn't come. But we have tried with other wells, and also from new drilling, we have added to this amount, and the decline which we thought that it will create, it didn't create that much. But we are again on right track, and it is if no such blockade happens, then we are expecting that will be around 3.5 plus this time. This is beyond our hand actually. Did I answer it properly?
Yes, sir.
You could got it. Yes.
Yes, sir. Thank you for the elaborate answer, sir. That was helpful. Last question, sir, on DNPL capacity augmentation. We have mentioned in presentation that 15th November is when we were expecting mechanical completion from 1 MMSCMD to 2.5. What is the status on mechanical completion, sir? Is that achieved?
The DNPL pipeline, no?
Yes.
DNPL pipeline, I think.
I think Tuhin will take this question. Tuhin,
yes. Tuhin, please. Tuhin, tell.
Thank you so much, sir. Good morning, everyone. So, yes, the DNPL pipeline, mechanically, we have completed all the works. Now the next step would be to obtain PESO and PNGR PESO approvals and PNGRB authorization for the expanded capacity. And also there is one critical step in terms of hooking it up with the existing pipeline. For that we would need 7 days of disruption in the pipeline. So we are planning it as we proceed along with the PNGRB authorization.
Got it. So we continue to expect that what we have mentioned by April 26, all of this will be done. We continue to expect the same.
Absolutely. We will be up and running before April 26.
Thank you so much. Last question, if I may squeeze in, sir. Last question on NRL, sir. The throughput at 0.75 metric million ton was also on the lower side. If we look at quarter on quarter, we operated at 100% utilization. Was there any maintenance shutdown, and if that is complete now?
MD NRL, if you would like to answer this question.
Yes. We did not take any shutdown. There was, as we are dependent on the crude supply from Oil India, and there was a very marginal dip on the availability. That also affected us. But we are still more than 100%, and this quarter we have accumulated crude, and then we are getting some imported parcel as well. So this quarter will be above 100% again, actually. So there was no maintenance-related shutdown in the Q2. And Q3, there was a small shutdown that we had to take on safety-related thing in our primary unit, but we are out of that shutdown. So hopefully in Q3 also we will exceed 100%. So we will maintain more than 100% for the entire year.
Thank you so much, sir. That was helpful. All the best, sir.
Thank you.
Thank you. The next question is from the line of Probal Sen from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. Very good morning. Firstly, on the Andaman write-off, just wanted to understand, what were the results of the drilling campaign so far, and what has led to the write-off of the well? Plus, how many more wells are we actually planning at this point of time in terms of our drilling campaign in the region?
That's a good question. We have with us ED Exploration. May I request ED to respond to this?
So very good morning to all of you. So Andaman exploration has been quite a success for us in the sense that we had ventured into Andamans way back in 1980s when we drilled 7 or 8 wells. So thereafter, after a long time, we had again been into offshore waters because this is the thing which is happening all around the world where big discoveries are being made. So right now we have completed 2 number of wells. The number 1 well was Vijayapuram 1 and the second well was Vijayapuram 2, where we could see the occurrence of hydrocarbons and the gas was even flared. Now what we are exactly doing is that we have moved to the 3rd well and we are currently drilling it, but our plans are to appraise the Vijayapuram 2 occurrence of gas, for which we are planning supplementary 3D seismic, which is going to give us tighter control of the subsurface to plan future well and define the new strategy for exploring and exploiting hydrocarbon resources from there. And as far as the total number of wells goes, so we have in line of sight 3 + 1 wells as of now, which includes the 2 number of wells which have already been drilled, the 3rd well which is under drilling, and there is 1 well in the Andaman West. But depending upon the success in the appraisal, the exploration strategy will be charted out and we will go ahead with the momentum of discovering these hydrocarbon resources, and the number of wells may increase in due course of time.
Just to understand, sir, thank you for the, detailed answer. The write-off basically happens anyways as a matter of course, even if there is a reasonable, even if there has been a successful discovery of hydrocarbons. Is my understanding correct?
I think that's correct. Because write-off is independent of discovery or occurrence of hydrocarbon. Because write-off is basically an accounting treatment which is done based on the assessment of the situation there. It has got nothing to do with the discovery or the future prospects. So I believe that answers your query.
Got it, sir. And any sort of timelines you can put on when we can get an estimate, even a contingent resource kind of a number from this region? Any assessment that your exploration team or seismic team has done at this point of time?
Yes, ED Exploration is
As I told you that a very thorough appraisal of the occurrence of gas is required, irrespective of the well which is being drilled, because each of the wells will be taken into account accordingly. So we are planning a supplementary 3D seismic, which gives you a better image and tighter control of the subsurface. Once that is available with us, which we are planning very shortly, within another 3 to 4 months, we'll be carrying out the supplementary seismic in Andaman. So this will give us those numbers which are much awaited by us as well.
So basically, sir, end of next financial year is when we can expect to hear more concrete updates as far as numbers are concerned. Is that a fair way to look at it?
It will more number of wells as we complete our seismic exploration, as we image, as we interpret, as we integrate them, we'll have numbers in our hand. Yeah.
Right. Thank you, sir. The second question was with respect to the NRL numbers. Is it possible to share if there was any significant inventory component in the $10.6 GRMs for this quarter?
So MD NRL, would you like to take that question?
Yeah, I would pass this question to Saket. I don't think there was any significant contribution of inventory, but let Saket answer this question.
Saket,
over to you,
please go on.
Saket, if you are there.
MD sir, if Saket is not there, I'll just give a response.
Yeah. You have the numbers. You have the numbers. Trisanku, you can share the numbers. Yeah.
Mr. Jain, actually this 10.56 has an impact of only 44 cents. So this is very minimal.
So therefore, the inventory was not the factor here. Actually, we enjoyed a very good margin in the second quarter, and the good news is that kind of margin still continues in the quarter three. So basically the quarter two margins which were available has resulted in this GRM that you have seen.
Got it. So one final question.
More to do with the spread.
Understood, sir. Understood. So one final question about the expansion. If you can kindly just once again refresh what's the latest timeline for physical completion and commissioning of the expanded capacity for NRL?
We have already done around 95% in one of the plant called DSGT. So that is ready for actually, in fact, pre-commissioning is underway. The primary unit, CDU-VDU pre-commissioning is underway. So we are hopeful that by end of December, we should be in a position to commission our primary unit, and gradually other units will come. But since it is a very, very complex refinery, you will understand that, and you have seen other refineries. So it takes a while, maybe 2 quarters to stabilize. So you can look forward for some production in the Q3 or Q4 of, the Q2 of next year. Q2 of next year, yes.
Understood, sir. Thank you very much. I'll come back for more questions, and all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Kirtan Mehta from Baroda BNP Paribas Mutual Fund. Please go ahead.
Thank you, sir, for the opportunity. First question was about the exploration write-off. You mentioned that this is independent of the occurrence or discovery or future prospects. Or in what scenario do we capitalize the exploration well expenses?
Sir, this is CGM FND who is answering. Sir, but could you please repeat your question?
On the Andaman exploration well, we explained that we have written it off despite there has been a hydrocarbon discovery and we were planned to appraise. So I just wanted to understand the accounting policy in terms of when do you actually capitalize the exploration expenses for well?
Sir, first of all, it's not a discovery. What we have basically informed the community is that we have observed traces of hydrocarbon in that particular area. So for it to be declared a discovery, it needs further studies, and maybe ED exploration can take it up to further explain. Once a discovery is established, then we certainly capitalize. However, before a discovery can be declared, lots of studies need to be carried out, which we are in the process of carrying out. So ED exploration, I think that answers your query, or you need further clarification?
So basically, even the third well expense that we are drilling, as well as the appraisal well, could also get capitalized because this will also get written off in that sense. Is that a right understanding?
Yes, that's the right understanding.
And what is
capitalization would depend on so many other factors, but everything begins with traces of finding out hydrocarbons. So that is the first step which we have basically just crossed.
Right. And could you also sort of highlight on the exploration well capex that has been planned for this year as well as next year, and how much of them is likely to be written off under this policy till we have actually a discovery?
See, write-off is not a policy-driven thing. Write-off is a decision which is taken based on the studies carried out, based on the various other factors. So once a decision to write it off is taken, then only it is taken. For us to write off, we would be awaiting the results of various studies, are both in-house and outside. So that is how it happens. Now, CapEx, I request CGM F&A to please answer.
During the current year, we had budget about around 7,000 crores of our total capex. The total capex has been distributed between your E&P activity as well as your normal PPE. So out of that E&P activity, we have around 1,927 crores of budget of development drilling, around 1,700, and our seismic is around 650. If you add up all these three figures, it will be around 60% of our budgeted figure of 7,000 crore. And normal PPE, what we have budgeted for this current financial year is 2,200, around 84 crores of rupees. As of now, till date, what we have been able to achieve is around 5,561 crores has already been spent on account of our capex expenses. This 5,561 crore also includes a contribution towards equity to our material subsidiary of around 550 crores. So our achievement to a large extent is around 70 to 75% within this last 7 months. We are expecting to be beyond our budgeted figure.
So just to add on to what CGM F&A has just said, our capex year on year has been rising over last few years. If I can just quote the numbers for 24-25, against a budget of 6,880 crore, 6,880 crore, our spending has been 8,000 crore. So basically, we, going by our track record, we exceed the budget provision. So the same is likely to happen this year too.
Sure, sir. In terms of the FY26 production, could you also would there be any implication of softer production on the FY26 targets?
Gio, would you like to take this question?
Yeah. No, can you repeat the question?
Ketanji, if you could repeat the question.
Sure, sir. I was asking, we had sort of a softer production in the Q2 than our own expectation. So will this have any implication on the FY26 target, or would we be able to compensate for it during the second half?
Definitely, because if it would have been small hiccup, we would not have been bothered. But this really impacted a little bit on our production, because for around 2020 now, if you look at it, September 16 now, today is November. What today's date is November 17. Almost 2 months. If you out of these 2 months, almost 1 month, our production went close to 9,000, which we were producing as 9,720. Now we are bringing it up, but we are trying our level best, because we have changed our strategies also. Now I am here in field headquarters, looking at both production and some other aspects also, so that we can bring the production up. I am already here in last some 20 days in the field headquarters only, so that we can bring the production to that level. And maybe we'll bring it to the level, but I don't say that we'll be able to go to a very the expected level. But we are trying our level best to bring it to the level. If it is not up to the expected level, but quite close to expected level. That is what our attempt is.
Thank you for
every day we are doing optimization. Every day we are trying to bring in new wells. Every day I am going well by well with the teams, so that I can bring the production to the level which we expected. Yes.
So I think Gio is cautiously optimistic there, but I am quite hopeful that they will be able to kind of face the challenges, and we are slowly coming back to our earlier level of production. I hope that possibly if we might be able to surpass the target that we have set for ourselves. But I will otherwise go with Dio, whatever he has said.
Sure, sir. Thank you. One last question from my side. We have been working to sort of have the international partner for our deep water exploration. Could you update the progress that we have made during the quarter on the side?
Yes.
Yes,
Reaching out exploration, if you can just.
Yeah. So reaching out to international oil and gas majors has been at the core of our building momentum to getting into deep and ultra-deep offshore waters. And in this context, let me tell you that we have a service agreement with Total Energies, which is an oil and gas majors, which has enormous amount of experience when it comes to deep and ultra-deep water exploration. And through this service level agreement, what we have done in the past is that we have leveraged their expertise in terms of well design, planning, and other engineering strategies so that our exploration activities can come to fruition. And we are further trying to even work upon with them, engage with them to expand our scope of services. And I'm not going to declare it right now because we are still working on it over and above what we already have. Apart from this, we have been reaching out to many other national and international oil and gas majors. One of them is Woodside Energy, where we are hopeful that we'll be able to have some sort of engagement with them so that we can partner together. More than the financial part, what our objective is, that the technical knowledge base and expertise is what builds upon success in any exploration activity per se. So this is a forte and this is what we are looking for, so that together we can synergize together and lead to some good discoveries in the offshore frontiers of Indian sedimentary basins. So outreach is at the core of Oil India's activities.
Thank you, sir, for this detailed answers.
Actually, just I'd like to, hello, dear sir. I'd like to add to it actually that we are in advanced discussion with Total Energies regarding this thing, especially whatever exploration is going to happen in terms of stratigraphic traps, like CGM and the ED and Mr. Mandal has told. These discussions are on at a very high level, and it is going on. So we are engaged with them, and in all future exploration, especially in deep waters, they will be our kind of technical partners, at least. So that is there. The next thing I didn't tell the number actually. So what we are expecting is that the number will be, in terms of production will be around 3.5 to more than 3.5 actually. So we are so 3.5 will be we must cross, but we are asking for 3.55. That is the target. Like you asked me for a number, na? So I say that 3.5 to 3.55 will be my target for the production.
Thank you, sir.
Thank you.
Thank you.
Thank you. The next question is from the line of Sarthak Tikta from DSP Asset Management Private Limited. Please go ahead.
Yeah, hi. Morning, sir. Am I audible?
Yes, you are.
So just coming back on the production target, last quarter we had highlighted that we had 3.7 million ton of oil and 3.65 BCM of gas production target for this year. And subsequently for FY27, 3.95 million ton for oil and 4.31 for gas. Just wanted these four numbers, updated numbers post the weak production that we had in Q2.
So what exactly is your query? You want some numbers from us, or you want a clarification, or what exactly are you looking for?
Sir, I want updated FY26 and FY27 production guidance for oil as well as gas.
So the updated production outlook is like this. FY26, 3.776 million metric tons. However, going by the disruption that has happened in our producing area, we may have to scale it down to 3.55. We are still trying to achieve that target, but we are keeping our fingers crossed. As far as FY27 goes, our number would be 3.798. You can take it as 3.75 on a conservative side. And FY28 would be 3.98, or you may take it as 4. If I'm a little more optimistic, then it can take it as 4. So by FY28, we'll be touching 4. As far as gas is concerned, this year we expect to achieve a production of 3.6 BCM, FY27 3.8, and FY28 4.6. That's the overall outlook for next three years.
Okay, got it, sir. This was very helpful. Just one more thing. On FY27, you mentioned in gas 3.8 BCM, right? That is significantly lower than the Q1 guidance that we had in for gas for FY27. Considering DNPL to come up by April, which Tuhin mentioned, any other reason that we see that the weakness on the gas production outlook?
Would you like to take it? Just a minute.
Yeah. So, in terms of gas production capacity, we are very well prepared to ramp up gas production to much higher levels. But the numbers that you are reflected here are as per the ramp-up plan of the NRL new refinery. So the NRL new refinery consumption won't start in day one. So it would step by step increase in steps, and that's how the numbers are arrived at here.
Okay, got it, sir. Thank you so much. This was very helpful.
Thank you. The next question is from the line of Shabri from MK Global Financial. Please go ahead.
Yeah, so I've got two questions. Firstly, on the production side. So on the gas side, I think your numbers you mentioned is 3.6 BCM for FY26, but the first half number is something like 3.25 BCM. So somehow it doesn't add up, because in order to do 3.6 average for the year, you'll have to do 4 BCM for the second half. So possibly I think it could get adjusted, right? Probably this year it could be more like 3.3, 3.4, then we go up to 3.7, 3.8. Is that the right understanding?
Gio, would you like to take this question?
Yes. You see, when there is a disruption, so it affects both oil and gas actually. So because of that, we will have a little bit less, which has to that 3.65 is our target for the gas.
That is full year, or that is second half of this year?
Yes.
Is that for the full year FY26 or second half of 26, 3.65?
3.6 is for the full year.
It is for the whole year. It's for the whole year.
That's for the full year.
We don't target actually half year. We don't target actually. We target for the whole year, and we are trying to cope up, and we'll be having more production in respect to last year. That is for sure. Because in gas, we can ramp up actually. We can ramp up. Only thing is that the gas. In case of gas, what happens is that the demand is the most important part. Now is the time for the tea gardens. They take less in this month. So even if I have the capacity, we cannot increase the gas production by that much. You understand my point, na? So because tea gardens, this is not the plucking time. This is the lean time for the tea gardens. So other industries, when they take, we are ready to give, and hopefully if NRL increases and if somehow we can bring it forward, this DNPL index, then maybe we can increase further. That's all.
And this,
I think we'll be having the same production or a little bit higher production with respect to the last year, not less.
Right, sir. And second, this DNPL, I think possibly that is the main pipeline for you to raise production. So this pipeline, April 2026, it will get fully commissioned, and from an NRL volumes will also get expanded by that same time. Is that right? And then if not others, then at least you will supply to NRL around 2.5 MSCMD. Is that the right understanding?
Yes.
Oh, okay, sir. Yeah, thanks. Secondly, second question is on your capex. So you have mentioned that you have done 5,500 crore for H1, and 5,000 crore is basically the core capex if we remove the NRL rights subscription. Then, but your cash flow capex is something like 1,600-1,700 crore. So is this because of that write-off getting adjusted in the PNL? Is that the adjustment why there is a mismatch between cash flow statement capex and what you have stated in your presentation?
No.
Yes.
It is not like that. See, 5,561 is our total capex utilization till date. But if we run through the figures, this is a capital equipment which we have budgeted for 2,284. We have already spent 1,280. So for exploration and development drilling is concerned, it was budgeted as around 3,500, 3,600. Out of that, we have already spent 2,200. For survey, which we have planned for 629, we have already spent 572. For our overseas, what we have thought of around 100 or 120, we have already spent around 385. For subsidiaries and joint ventures, which we planned around 350 in the beginning of the year, because of the add-on of the NRL investment, it is now standing at 1,117 crore. So the cash investment activity which has been shown in the cash flow, that may not be the exact figure with what we have already been achieved through the capex, because it is a mix of investment as well as the financing activities also.
Got it. And regarding your Andaman, I think Bangladesh and Gabon, I think we are done with the write-offs, right? Or is there anything more pending?
See, what we want to make it clear that based on our accounting policies, the principle which we follow as per the Ind AS 106, we only write off our wells when it is fully out of question. Now thing is that we have provided for our Gabon, we have provided for our Bangladesh asset also in our books of accounts. But final write-off will only be taken when we will fully decide that all the activities for the particular blocks have been closed and we have to wind up from the place. We have provided in our books of accounts, but the final write-off may positively or indicatively may take place by end of this year.
Right.
And that also has been taken care in the first quarter itself.
Got it. And the last question is this 700 crores. So this is Vijaypuram 1, only 1, right? Not 2.
It's Vijaypuram 2, not Vijaypuram 1.
Okay, it's Vijaypuram 2, which has been completely provided for, 720 crore. So Vijaypuram 1 will be again tested now, and based on that, you will take a call, and then the third well and fourth well will come. Is that right?
Yes. That ED exploration and development has already explained in details what is the plan for the Vijaypuram 1 and 3. So subsequently it will come out.
And 720 crore was for H1 or it was for just Q2?
See, what happened during H1, we have provided for 2 of our blocks, the major expenditure. Providing for our well assets is the normal course of our business. Whenever we see that a well has not been able to achieve what we have planned for, we automatically, based on our accounting principles, we provide it.
No, it is 350. 360 crore for the 2 quarters, or it is just one time Q2 itself 720 crore? Just wanted to know.
No, it is 723 crores for this quarter itself.
Okay, this quarter itself is the 723 crore. Okay,
Yes.
okay, sir. Thank you. Thank you. That's all. That's all from my side. Thanks.
Thank you. A reminder to all the participants that you may please restrict yourself to one question. The next question is from the line of Pranita from Morgan Stanley. Please go ahead.
Good morning, sir. Thank you for this opportunity. I just wanted to understand, is there any planned shutdown for NRL for next 3 to 6 months, especially with all the mechanical completion that is planned?
MD sir.
Yes.
Will you take up this question, please?
It was regarding what actually? Just
Asking whether there is any plan for shutdown of the refinery.
No, there is no plan for shutdown. Shutdown will come in FY27 only.
And so when are you expecting the first crude intake in the expanded capacity?
In December this year.
And
this
the ramp up?
In the primary unit, because we have to gradually commission the refinery one unit after the other. So first crude intake is likely to happen in December itself.
Okay. And the ramp up after the second quarter will be, how much are you targeting?
Actually ramp up will be gradual. Any very serious volume will come in the Q2 of next FY. So that means starting from say June onwards, July onwards, you will see a rapid ramp up of the capacity. Prior to that, we will have the commissioning activity going on. It's a very complex refinery that we are going to commission. That you must understand. Yeah.
Right. So, and what is the net debt level right now in NRL?
Pardon? I couldn't get
debt level.
Debt level. Trishanku, if you can give debt level, I think debt is to equity ratio. You can tell Trishanku, it is with you.
If you see that the leveraging ratio for NRL as of now for Q2, what we have, it is 17,799 crores of total debt. Total debt has already been taken by NRL.
Okay, sir. Okay. Yeah. Thank you.
Thank you. The next question is from the line of Vineet Banka from Nomura Services. Please go ahead.
Hi, sir. Thank you for the opportunity. So can you please update on the $300 million dividend, I think it is stuck in Russia?
I will pass on to my DGM Finance, BD, Mr. Chamunandan.
Yes, you have rightly pointed out that some amount is lying in Russia due to the counter-sanction measure imposed by the Federation of Russia against the corporates which have been incorporated in unfriendly jurisdiction. And the investment by Indian consortium, oil, IOCL and BPRL, has been routed through an entity in two entities in Singapore. One is Ranker India PT Limited and one is Ask India PT Limited. Since these two entities are incorporated in Singapore and unfriendly jurisdiction of Russia, funds are not allowed to be repatriated out of Russia at this point. But we are evaluating various options and we are hopeful that we will be able to give you some positive news in this respect by the early part of next financial year.
So can you remind what is the annual run rate of dividends from Russia?
What's the question? Annual?
So annual run rate of dividend. What is the annual dividend that we get from Russia in US dollars?
Yeah.
If you look at that out of our investment in TYNG dealers of the TAPS Uraq assets, more than 100 Around 109% has been paid back by this particular asset, and that is within a period of 8 years of investment. Yes, and the total dividend paid back is $474 million term, and the investment was 436. So so this is basically the run rate you can derive out of that. And regarding the other investment in Vancouver Neft, out of the investment of 498 million has been paid back by this particular investment.
Okay, sir. Thank you. So, second question is on the completion of this Paradip-Numaligarh crude pipeline. So after the completion, are you also looking to import crude from Russia, since you already have, I think, participating interest in those couple of assets?
Yes. Let me take this question. See, we have already identified more than 100 varieties of crude, and it actually depends upon which gives the best economics. So we will import accordingly, and provided there is no sanctions against a particular country. So we have to abide by whatever rules are there at that point of time. So because we have Russian crude, and we may not be able to import if there is a sanction ongoing actually. So that would be my take at this point of time. But at the time of import, we will take a call.
Okay, sir.
Did I answer your question? Yeah.
Yeah, sure. Yeah. So the last question on the Andaman write-off, just following up on that. So if the discovery is established, will these well write-offs be reversed and capitalized?
No. See, as I have told before, the provisioning of the wells and write-off of the wells is two different activities, two different independent activities. We have provided for well number 2 for 723 crores. This well has been considered as no presence of hydrocarbon. So accordingly, this well can consider as abandoned and has been provided in the books of the accounts. So far other wells are concerned, the progress of the drilling is still going on. Study is on. Until and unless we finally fix up that there is no presence of hydrocarbon, then
there is occurrence of hydrocarbon.
Then till then we will not capitalize it. So as of now, for well number 2, we can conclude that we have provided and this cannot be capitalized in the future.
Okay, sir. That's all I have.
Just a minute, dear sir. I'd like to answer this question.
Dear sir has left. Abhijit, I am here.
Okay. So I'd like to answer this question because this is related to exploration and production. No? So since even if you discover in an exploratory area, exploration well, you cannot capitalize in immediate context. You will have to ascertain the total volume. You will have to ascertain whether the economics works out or not, and for that you have to have appraisal well, you have to have development well. And the exploratory well in the first place is not monetized directly. This is one reason, because you are not thinking about the completion, you are not thinking about the complete wellhead setup, everything. That is why generally the exploration wells are written off. That is the way it is done generally. That is to answer you because this question came twice. That's why I thought. Did I?
Yes, sir. Yes, sir. So just last question. So on the NRL refinery, once the expansion is complete, what is the maximum gas volume that will be taking in? Because I think there will be some priority sector commitment as well. So I think current run rate is around 0.5 MMSCMD, if I'm not wrong. So what is the maximum you can take it up to?
So the current run rate in NRL refinery is around 0.9 to 1 MMSCMD, higher than 0.5. And after full expansion and 100% capacity utilization, it will go up to 3 MMSCMD.
Okay, sir. Thank you. All the best.
Thank you. The next question is from the line of Gagan Dixit from Elara Securities. Please go ahead.
Yes, sir. Hello. Yes, sir. Thanks for taking my question. I have some few technical question related to the Andaman discovery. So, earlier news says that the gross feed pay, I mean, the hydrocarbon where you find is between the, I think, 2212 to 2250 meters. So it's like 100 feet pay. So, based on your understanding, what is the, I think the minimum threshold of the gross feed pay that is, that gives you confidence that, yeah, it's a discovery? That's my first question, sir. And, second thing is that, when you try to drill the two more wells, appraisal wells, I think looks like, based on the first discovery. So, how far in the distance, you are thinking to drill? I mean, that gives some idea about the area of the discovery.
So I'm coming to your first question, okay? When you said that we are talking about ascertaining the volume. See, this is an exploratory well. Number one, we should understand that this is a pure exploratory well in the area. Number one. And what we have established is the occurrence of gas. This is number two. And number three, as I told earlier, is that we are trying to conduct a supplementary 3D seismic in order to have tighter control of the subsurface in ascertaining the extent, the lateral extent of the potent sand bodies where hydrocarbons could be trapped. Okay, so this will come only, as our Director of Operations also explained, that this is the exploratory phase. This will be followed by an appraisal phase, followed by a development phase thereafter. So what happens essentially during an exploration phase, moreover in the case of offshore, is that you do not monetize the discovery from the first well itself, because you take up an exploration well with the minimum amount of infrastructure to establish it, because there is high cost of a well that goes into exploration if you build upon a development facility for it, and it is not even prudent to do it in that manner. So this question should be knocked off this way. Number two, you were telling me that you are drilling an appraisal well, the next well that we are talking about, third well. It is not an exploration. It is not an appraisal well. It is a pure exploratory well, the third well that we are drilling right now. So what we will essentially do is, we'll drill this well. If we establish hydrocarbons over there, it will also go through the appraisal phase. So each and every occurrence of hydrocarbon or establishment of hydrocarbon goes through an appraisal phase necessary, where you conduct much more geoscientific analysis through seismic data acquisition, processing, interpretation, integration of the data that you acquired through these wells, and then take it to the process of discovery. And then is when you ascertain the volumes and decide upon your appraisal and field development program. Thank you.
Yeah, and sir, it's a deep water discovery. I think it's I think around 300 meter deep in the water. So do we have the in case of the gas, do we have the, or do you know the capabilities available to get the gas? Because I call earlier, the ONGC has the problem to get the UD1 discovery, because it's the ultra deep water gas discovery. So is there any risk for managing the gas? I mean, to take out, to sell?
So first of all, let me correct you that these are not. First of all, let me correct you that these are neither deep or ultra deep water discoveries. What? Yes, sir.
Actually, I'd like to correct it that this is not deep water. Actually, yes, this is not deep water. This belongs to still to shallow water, you can say.
Okay.
Let me complete it just for the sake of clarity, because Andaman is coming time and again. I'm pleased to answer Andaman because it has been a milestone for Oil India Limited in terms of establishing the occurrence of hydrocarbons over the last 3 decades. So it has been a real achievement this way, and we are definitely getting motivated by the number of questions being asked. So this is not deep and ultra deep waters, it is shallow waters. The water bathymetry is 300 meters. So the definition of shallow, deep, ultra deep, it follows with water bathymetry, not with the column that you have drilled, say 2,620 meters that we are talking about. Thank you.
Okay, sir. And my final question is, what is typically the rig rate that is being charged here? I mean, the rigs that you are hiring for this drilling of this Andaman block?
I think the ODR rate is around. You are talking about the daily operational rate?
Yes. Because rig cost is typically higher on the more big on the sea side.
I think it is around 2 crores ODR.
Okay, sir. Okay. That's from my end. Yeah, thanks.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached to the end of the question and answer session. I now hand the conference over to Mr. Vardarajan sir from Antique Stock Broking Limited for closing comments. Over to
Thanks,
you.
Shravani. There are a few more in the question queue. Please take it up with the management or with us subsequently based on your convenience. Request the management to give their closing remarks, please.
Thank you. Thank you very much for all those who have joined this Concall, and all the questions were very helpful and effective for us. So your participation in Oil India's earning call. It's a big thank you to Antique Stock Broking for helping us to organize today's session smoothly. We hope that we will be able to address all the queries and provide the clarification you were looking for on our quarterly performance and ongoing initiatives. Should you require any further information or clarification, please feel free to reach out to our Investors Relations cell. The contact details are available in our website. Once again, thank you for your time, participation, and continued trust in Oil India Limited. We value your engagement and look forward in interacting with you on the ongoing basis. Thank you and have a great day ahead.
Thank you, sir. I wish to thank all the participants and the management for giving us this opportunity. Have a nice day.
Thank you. Thank you.
Thank you so much, everyone.
On behalf of Oil India Limited and Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you must now disconnect your lines.